How's it going, everybody? This is BeatTheBush. Today I'm going to talk about 10 self-employment tax write-off that can make you rich. Albert Einstein once said, the hardest thing to understand in the world is income tax. Now, why is it so difficult? Because usually when they make it very simple, people always try to find ways to get around it. And then they make new rules, and then people get around those, and then they make new rules. So then it just keeps on getting bigger in terms of the tax laws. Now, here's a disclaimer. I am not a tax advisor. I cannot advise you on what to do with your taxes. My hope with this video is to point you in the right way, that there are such things that exist out there. You may not qualify for them, but you would know about the topic, and then you can go research that yourself some more, maybe talk to your financial tax advisor, and then get things cleared out to see if you actually qualify for it. Everybody's individual situation is going to be different, so all these things that I list may not actually apply to you. You might not be a self-employed person, but I think that even if you're not self-employed, you should really watch this video, because then you would get an idea of how much benefits that you would get if you try to earn money outside of your regular job. There are so many things that you can write off. This translates to all that money that comes in. You are not paying taxes on it because you're just expensing them as part of your business. Now, let me begin. To my surprise, that this year is my full year of being self-employed. And to my surprise, that you can actually write off self-employed healthcare insurance. Because I am self-employed, I have to pay for this out of my pocket. Then this is actually a good thing, because it kind of subtracts off of the revenue that I have, the profits that I have on running this YouTube channel, and it becomes so that I do not get taxed on it. Realize that when you are self-employed, you're essentially paying about 14 to 15% Social Security taxes. When you're working for a company, you still pay about 7% Social Security taxes, and you pay this up to an income of $118,000. Now, where does the 7 other percent comes from? Your employer pays this for you, and you do not even see this in your salary. When you go the self-employment route, it means you have to pay for both sides. You have to pay for your own 7%, and you also have to pay the employer 7%. So it becomes more and more expensive to become self-employed. But the redeeming quality here is that, yeah, you can, if you're good about this and if you're savvy about it, you can write off a lot of your profits so that it does not appear as a profit, so that you don't get taxed on it. The second thing that you can write off that would massively dent your profits, you take it off so that you don't get taxed on it, is retirement accounts that you can use as a self-employment person. Depending on your income, you may be able to write off something pretty significant, tens of thousands of dollars from your profits. The third write-off that you might not realize is vehicle expenses. In 2018, every single mile that you drive as a business expense will deduct you 54.5 cents off. The fourth thing that you can write off is business travel expenses. If you're going somewhere on business, you need to, go to a trade show relating to your job, then you can write off these airfares, the hotel, bus tickets, train tickets, all those travel expenses, things that you can just actually put in, and it would come off of the top of your profits. You can write off business cell phones and also communication fees. Now, for me, I don't have any, so I do not really need to write off that, which is a pretty good position. You can also write off business meals, but this gets a little bit complicated because you can either write off 0%, 50%, or 100%. Generally speaking, you can still write off 50% of your meals when you are having it with a customer or a client. 100% write-off is a little bit different, and they have all these different rules regarding how it's actually used. For example, if you're selling some seminar, okay, and you actually have to pay for a banquet or something, you have to pay for the food for everybody, then you can actually write off that 100%. So this is kind of rare for most people. So you really have to look at how you actually spent that business meal in order to categorize it correctly. For this channel, I do rent a PO box where I get packages relating to business only. I do not get anything else. This is for the sole purpose of this channel. So the cost for that rental for that PO box, I can actually write off. It's about $200 or so. So if I earn $200 on YouTube, well, it would seem like I did not earn that money at all, because it just comes in and it goes out the door, because it's part of a business expense. It's the money that's required for me to run this operation. The eighth thing is a little bit more difficult, which is a home office expense. Now, Generally, they like you to have a dedicated spot. Like, let's say you have some room somewhere that is a dedicated home office type of thing. They want you to track how many square footage it is compared to the whole property. And then also how many percent of the time you use that area for business only purposes. So they kind of want to figure out, okay, if you only use a certain portion of your home, and you only use it a certain amount of time, then you really have to figure all this out to see how much deduction that you can actually get. If you're actually renting a whole place, offsite, then that's a lot easier because the whole place is actually a home office compared to, for me, where this is a home. Mostly every single video that you see me do is in this living room. Now, I want to say if you go the self-employment route and you start having expenses, it's very, very important that once you start doing this, you need to track your expenses every single day. Now, this includes every single mile that you drive. If you take public transportation to conduct your business and it's on some value card or something, you still need to track where you went and how much the fares cost in order to deduct all this. My experience with this is if you do not track it every single day, you're likely not going to remember, especially with how much you spent on public transportation. Given that it's the same day, it's still fresh in your memory, so you can write it all down. So I highly recommend that you go and log down your miles. I have a little notebook inside my car that whenever I drive somewhere, I actually write the date. I write the start miles, the end miles, and then I track every single trip and the business reason for each one of those. So you can do that, the same thing for public transportation. Same thing goes with the business meals, everything that's business related. Write it all down, no matter how insignificant. Even if it's $1, if you keep on doing that every single day, it's going to add up by a lot. There's other things that you can write off in terms of a business expense, especially equipment that you use solely for your business. It might be interesting to talk about this honey badger here because this certainly is not for me to play around with. This is kind of like my channel icon. It's on my t-shirt and stuff, so I put it here for my video. So this was interestingly expensed as part of my business expenses. You have to be very careful if you are buying certain item and you also use it for personal use. You have to keep track of how much do you use it for personal use, or is your business something completely unrelated, and then you decide to buy a camera because you really enjoy photography or something, and then you use it, just once or twice for your business, and then you go, oh yeah, it's all business. So when you write off business expenses, it's a lot easier when you know that that item is only used for business. You're never going to use it for, personal reasons. Now, also, if let's say sometime later, you devalue this item, you no longer use it or something, you need to undo it in your taxes. So if you feel like sometime in the future, you're not going to use that item and then you're going to sell it off somewhere, then there's complications with that because you already took the deduction. Then when you sell it, it's kind of unfair, right? In the perspective of the government, because you already took the taxes out. Then that means when you sell it, you need to kind of reverse this. Anyway, I just want to mention this just so that you know where to look in the future if you have certain costs related to self-employment. Now, as a general arching theme over here, I've heard it before I did the self-employment route that, wow, a lot of rich people, they always have their own businesses. Now you see why. Maybe you still see why, because all these expenses, if you try to integrate all of this into your daily life, it means that a lot of the things that you use, even though it's considered business expenses, it might get integrated into your life so that essentially the way that you live your life is one whole giant deduction. So my theory, and probably with entrepreneurs and people that are trying to increase their wealth for their own good, is that you should try to maximize your tax write-off within the confines of the law. I'm completely not saying that you should, try to cheat the system. You go by the books, study the write-offs that are possible, and follow the rules in order to get those write-offs. Just like this video, you watching this video is kind of like learning about brand new write-offs, which you can apply to your own taxes. Thanks for watching this video. If you're interested in supporting this channel, check out my Audible link down in the video description below. Push that like button, push that subscribe button, and ring that bell icon. Thanks for watching.